Hi, I'm Kayleigh. I'm Director here at Scholes Chartered Accountants, and I'm here to bust some myths about making tax digital for income tax self-assessment. So it's not the case that all self-employed people or landlords have to register for making tax digital for income tax. The test for whether you have to register is based on your income in the tax year ended 5th of April 2025. If you have self-employment and or property income of £50,000 or more before expenses in that tax year, then you have to register for making tax digital and do quarterly submissions. So it's not for everybody. There's some very specific exemptions to this, but in the main, if you breach that threshold in the 24-25 tax year, you have to register. And additionally, if you're a partner in a partnership and you don't have any self-employment or property income, then you won't need to register regardless of the amount of income. So when we talk about self-employment income in this context, we mean sole trade income in your own name, not from a partnership or a company. And partnerships and companies themselves don't have to register for making tax digital for income tax either. So it's not the case that HMRC will calculate your income tax for you. You have to submit the quarterly income and expenses to HMRC, and then at the end of the year you will still need to do end of year tax return style submission, and in that submission you will include all of your self-employment and property income and expenses, claiming the tax release that you do currently in your tax return, capital allowances, including any other income sources you have like employment income, pensions, maybe investment income such as bank interest or dividends, and from that a tax calculation will be produced and all of that information will be submitted to HMRC, much like the current tax return format, and that's still due by 31st of January following the end of the tax year. So the quarterly income and expense updates don't include any aspect of tax that you've got to pay by the usual tax payment dates. So the £50,000 threshold refers to your gross income from self-employment and property income and not profit, so it's your income before expenses. So for example, if you had self-employment income of say £60,000 in the year ended 5th of April 2025, even if you made a much smaller profit or even if you made a loss, you will still need to register for making tax digital for income tax. And also if you had say £30,000 of income from self-employment and £30,000 of income from property, making £60,000 in total, you would need to register because those sources combined put you over the threshold. Other income that you have doesn't count towards the threshold. So for example, if you've got employment income, pension income, etc., that's ignored for the purposes of working out whether you've reached the threshold or not. So there will be people whose income was above £50,000 in the year ended 5th of April 2025, but they know that it's going to be less income in the current tax year or in the next tax year for various reasons. But unfortunately, that doesn't mean that you don't have to register. That's because it's based purely on your 24-25 tax return. So even if your income reduces substantially in this tax year, you still need to register from April 2026. One exception to this would be if you completely cease trading, or say you sold your rental property and therefore you won't have a qualifying source of income on the 6th of April 2026. But if you are continuing to have one or both of those sources of income, albeit at a much reduced level, then you still need to register. And I think it's important as well to say that the threshold for making tax digital is dropping from £50,000 to £30,000 in the next tax year, and then £20,000 the following tax year. And this is really significant because once you're in making tax digital, you have to have gross self-employment income and or property income below the threshold for at least 3 consecutive tax years before you can opt out of it. So anyone registering for making tax digital from April 2026 would be in that system of quarterly income reporting until at least the year ended 5th of April 2029, unless they cease trading completely in that time, of course. So you're in that system for at least 3 years. So although HMRC will be getting quarterly income updates, they will not require income tax to be paid quarterly with each submission. It's purely just a summary of your income and expenses in that time, and a tax calculation isn't submitted with that. It doesn't include income from other sources, for example, and it doesn't include any tax reliefs that you might be eligible to claim either. There is a thought that the government may look to do quarterly tax payments in the future, but for now, income tax is still due annually in January following the end of the tax year. In some cases, under the current system, an individual might have to pay tax in advance, which is when they make a payment in July as well. So that system will continue, but no quarterly income tax payments for the moment anyway. So there's still a requirement to file an end-of-year tax return with HMRC, and that's because the quarterly updates that are being submitted just have a summary of the income and expenses, and it doesn't from self-employment and property income, and it doesn't include any tax reliefs that you're entitled to. It doesn't include any other income sources. So all of that still needs to be put together into an end-of-year tax return that's submitted to HMRC by 31st of January, which is the same deadline as it is currently for the tax return system. So these quarterly requirements, that's an extra requirement, an extra thing to do every 3 months to HMRC, but you've still got that sort of end of year tax return style document that will pull everything together and give you the actual tax figure that's due to be paid to HMRC in January. In order to make the quarterly submissions to HMRC, you need to have compatible software that you can record your transactions on and then make the submission to HMRC in the required format. There are lots of software options out there these days, including lots of good cloud accounting solutions like your QuickBooks, your Xero, your Sage, FreeAgent, those sorts of products. As well as being compatible with Making Tax Digital, they're also really great for tax planning because we can pull the data off quickly with reports. So that is one benefit of registering for Making Tax Digital and using a platform like those to record your business transactions. But that said, for anyone who's currently using a spreadsheet, or perhaps they have relatively few transactions and they feel it wouldn't warrant a full cloud accounting solution, there are what we call bridging software solutions, which is essentially a way of adapting a spreadsheet to enable submission directly to HMRC. And so there's plenty of options and different ways of doing it. So what we're doing here at Scholes at the moment is we're assisting our clients with identifying the best solution for them and their business. And that means that some may opt to outsource the quarterly updates to our team, or we can provide training in using software and making the submissions to HMRC if they wish to do those quarterly submissions themselves. If you're worried at all about Making Tax Digital for income tax self-assessment, please do get in touch with our team. We're here to help. We can help you select suitable software for your business, or help you make the quarterly submissions to HMRC to ensure that you're compliant. We can also help you to register for Making Tax Digital, because that's the first step that needs to be done before the first quarterly submission can be made to HMRC.